Hi there everyone, and welcome to my new trading tutorial on Market Mum's Capital Protected Income Strategy, which is my new strategy that I've put together, and I've been trading this strategy for the last few months, and now I think it's about time I shared it with you guys, and I'm just so excited about it that yeah, I'm busting. So I needed to refine it and make sure that I understood it properly and things like that before I shared it with you. And I am really excited to present it to you today. And I'm sorry for being so quiet for the last few months, but this is why. It's because I've been putting this together and trading it, and you know, just wanting to make sure that I had it down pat, so to speak. So the whole aim of this strategy is like it's stress-free strategies for today's market, and that's definitely what this strategy is. So let's get into it, shall we? What exactly is it? I'm sure I'm hearing a lot of you saying, what is it? In broker speak, this is called a collar strategy, or a covered call with protection, or insurance. So, and why do I do it? Now, there's a few reasons, but this is the main reason that I do this: to produce a regular monthly income. Simple as that. Regular monthly income, and that is the way it has been for the last few months. I've been trading this since the start of November last year, and have been having some phenomenal results, and I'm really pleased and excited to present it and talk about it, and hopefully get you guys making some regular monthly income as well. So how does it work? That is the big question. I'm sure that's the big question in everyone's mind, is how exactly does it work? Well, there's 3 simple steps. Firstly, I buy some shares. I then write covered calls over these shares, or I rent them out. For those that have done the 21st Century Academy home study, you'll know what renting shares is all about. I am going to cover the basics of renting shares shortly, just so you can get an idea, but basically it's writing covered calls. And at the same time, I buy a put option or insurance over this over these shares, which you know, gives you that sleep at night factor, that's for sure. So now these steps, this is one of the most important thing to remember, is these steps are all done at the same time as one trade. Do not let your broker try to tell you that this is to be done in separate stages, because that's ridiculous. They all have to be done as one trade at the same time. And I'm going to give you a tool that will work out the actual strategy buy price. I've been refining that and working that out and putting it together over the last few months, and that's going to be on the site for you free of charge to download, which just makes things a little bit easier for you. So the big question, why do I like it so much? Well, I could go on and on all day about why I like it so much, but I'll just give you the main points as to why I like it so much. Now, you may or may not know, I've just released a new ebook, Mastering a Winning Trader's Mindset, where I go delve deep into how your emotions control you in your trading, and the idea is to not let them control you, for you to control your emotions. So for those that don't know, there are pretty much 2, maybe 3 emotions, main emotions, that are involved in trading. And we know the first one's fear, and the second one is greed, the third one is indecision. But mainly fear and greed are what drive the market, and this strategy eliminates those. It eliminates those 2 emotions, which gives you more of a chance to be profitable, because you do not need your mental garbage in the way. You want to be clear about what you're doing, and you want it to be you know, to be mechanical, so to speak. You do have to be flexible to some degree, of course, but you know, this whole strategy just gets rid of these 2 emotions. And I'll tell you why. It's because buying a put option eliminates your fear emotion, And selling the call option eliminates your greed emotion. Now, it eliminates your fear emotion by locking in your risk. Now, there is only when you buy a put, there is only so much money you can risk, and you get that, you know that up front, and you accept that. You must accept that. You must accept that you could lose it. I'm not saying that you should lose it, I just think that you need to know that you could lose that money. And selling the call option eliminates your greed emotion. So it eliminates the idea of you going, I'm just going to squeeze a little bit more out of this trade to try and get a little bit more profit. It eliminates that emotion. You know that if you do that, and the market will all of a sudden turn around on you and go the other way, and then you ends up gobbling up any profit that you did make. So this is why I love it. It eliminates your fear and eliminates your greed. Another thing about it is a low maintenance strategy. I tell you, once I put the trade on, I check the price maybe once, twice a day if I can be bothered. Most of the time it's only once, sometimes it's never, because particularly in the first few weeks, you don't really need to check this strategy until the last week. It's very much a lifestyle strategy. What I do is I check it, I go out by my pool and play in the pool with my kids. With this beautiful weather that we've been having lately, it is just so fantastic to have so much lifestyle and still be making money, and a regular monthly income too. The other point is the stock can move up and down during the month, and it does not affect your outcome, because you've locked in your selling price and you've locked in your you've locked in your risk. You can't lose any more than what you already have locked in. So there's another reason why I love it. I mean, of course, things can happen, and I'll tell you a bit later about the few things that can happen once you place the trade. And but to not have to worry about it until the last week, I think that's pretty good. Even though you lock in your risk and your selling price, you still do have to be flexible to some degree. If you're too rigid in your thinking, then you're going to snap. Whereas a flexible mind becomes more flexible in that you can bend in the storm to accommodate different outcomes and adjust your strategy and everything like that. Just like a flexible body is more comfortable to live in, a flexible mind is more comfortable to think in. So just keep that in mind. So now what we're going to look at is I'm just going to go over some basic renting shares, just so those that aren't quite familiar with the whole term of renting shares, in other words, writing covered calls, I'm just going to give you a little bit of a recap on how it all works. Okay, so over here I bought some shares at $24.49. I bought 1,000 of them. Now this is an actual real trade that I did last week, and it's working out really well so far. Okay, so I bought 1,000 shares at $24.49. So for that I've outlaid $24,490. And what I'm going to do as well is rent them out at $24.50, which is 1 cent above my buy price. And for this I receive a premium of $3.10. And times that by 1,000, I get a total income of $3,100, which is a very nice healthy profit of 12.65% up front. And that's all well and good, but there's a few things that can happen next.